Hey, everybody. So we got a little bit of a sell-off today. No question that I think people were expecting NVIDIA to lift things today. And it was a bit of a sell-off on the news kind of event, it seems. I kind of thought the train was leaving the station a little bit. I'm still optimistic. I think NVIDIA's announced some really, really positive things that could prove to be a bit of a turning point from the perspective of the market, right? The market was kind of really thinking about AI and is that slowing down? I think NVIDIA kind of reinvigorated the narrative a little bit, talked about this $3,000 desktop supercomputer that they've got going on, further gaming kind of technology at sort of reasonable prices, right? So that should keep the gaming side of things going. On the automated driving capability side, announced a big deal with Toyota Motor Company. So NVIDIA really being more of a player in the sort of auto robo taxi game, and I think that takes maybe we're seeing a bit of a sell off in Tesla today. I don't think that's necessarily part of this news. You know, the whole market's really quite soft, and Tesla hasn't been acting very well. Particularly yesterday, it closed quite poorly with the market doing well overall. But anyway, I think what may become clear is that NVIDIA is going to allow other companies to also participate. And even though Elon has Trump's ear and all that other stuff, and everybody sort of thinks of Tesla being at the real forefront, don't forget about Waymo. Don't forget about Uber is going to have to make its foray a little bit more of a foray into that area. So NVIDIA making it clear that they want to be a part of that, and they already have quite a few participants in that. BYD in China, which is absolutely massive. Like nobody talks about BYD, but Chinese EV makers are huge right now. And so if they are allowed to buy NVIDIA's chips, and that continues, you've got Rivian, Lucid, Li Auto. You've got all these players. That's more fuel to the NVIDIA revenue fire, right? And so it also talked about Meta platforms. It's got an alliance with them on some of their AI models. And there's just I feel like it kind of reinvigorates. It's kind of interesting how narratives can work sometimes. The market really focuses on one thing, whether it's AI or something a little bit more narrow. Could have been gaming. Years ago for NVIDIA, it was the whole blockchain area, right? Everybody kind of honed in on that blockchain area and kind of forgot about all these other businesses that they have, but they really have their fingers in a lot of things, and it's not a massively expensive stock. And they also talked a little bit about how they're gonna, we're about to see the dawning of a kind of AI application to robotics as well. Now, the robotics area, very interesting. I used to be very involved in the robotic AI automation theme. And one of the things I pushed even 5, 6 years ago was at some point, AI is really easy to implement on your desktop, right? It's in the from a software perspective, it's very easily implemented, right? Uses a lot of power and it's expensive and all this other stuff, but for robotics and automation, it's a little bit different there, right? Like companies to believe in that, you really have to, that's a big outlay of funds. You have to invest in robotics. You have to invest in all these physical things, as Amazon did, 10, 12 years ago, and they revolutionized warehousing because of their purchase of Kiva, I think it was back then. And so, that's going to come about at some point, this sort of smarter robots, smarter automation, probably going to mean more jobs under threat. I don't think that's a great thing overall. Some of this AI stuff is quite disturbing in a way, but I think they have their fingers in so many different pies that it's interesting again. So what have I done? Well, I've looked we put it on this morning, definitely a little bit early, but if you're looking for something that sort of next leg up, I think it's worth looking at. You can see NVIDIA's had this nice push from the mid 20s all the way to sort of the mid 50s, making new highs and then reversing in a really, really ugly red candle here. So there's no question this isn't very pretty. But having said that, given the storyline, the narrative, and the fact that if you look at the Philly Semiconductor Index, you have got something that still looks okay. We can see this pullback, but it definitely had this nice breakout. Now, I want to see that line hold there. I definitely don't want to see it lose that. If we look at the SMA, we've got a similar pullback. Nice big blast through there. Boy, it looks like we could close right on that line. Looks like the S&P may want to revisit 5,800 for a third touch of that level. A little bit concerning because this is a different topic, but we're getting into that sort of maybe neutral to short gamma area, which is a little bit concerning for broader markets. If we get S&P down a little bit more, we are in a bit of potential trouble from a volatility standpoint. It's kind of like it's not intuitive all the time, but down here, we may see volatility and less support from the market maker crowd. Whereas above 6,000, 6050, you might see a lot more call selling, a lot more replenishing of dealer gamma books, and they get that positive gamma, and that becomes very supportive. If you guys have watched my gamma videos, you'll understand a little bit more how that works. But when there's a lot of positive gamma, on the side of dealers, that means they are buying and supporting markets on the way down, and it creates a little bit of a clamp on markets. But without that down here, and I mentioned to our members this morning, I said below 59.75, you have to expect that this volatility is probably going to continue. I did not think we'd get this kind of pullback, but we are firmly entrenched in a volatile environment. Make no mistake, for just until the other day, we had about 5 down days in the market. We had a couple of big up days, and everybody got excited again, trying to, eyeing that 6,000 plus level, which I think becomes more constructive, brings in some of the CTA, vol targeting buying, like some positive flows. But at this rate, we are in a little bit of a wait and see. So going to be very much a trader's market in here. Took off some nice trades yesterday in MSTR. I may look to add those again as having a horrible day. But again, back to our task at hand here, SMH pulling back, we're going to want to see that kind of hold there. But when it does, I'm starting to feel like that 120 to 130 level is getting fairly safe for NVIDIA in the grand scheme of things. Of course, anything can happen in markets, but you might go in and look at something like a February or March. What if I go into a March upside turbo play, which I really have done incredibly well in over the past 6 to 8 months? If you look at something like the 125 put, you could sell a 125 put around 6.25. That means you now have $6.25 that you can play with to generate a little bit of upside, right? Now, you might look at this purely as an income play and go, okay, I want that 625. Perfect. Just look at that as an income play. Worst case scenario, you own NVIDIA around 118, right? That's a pretty reasonable level for NVIDIA. Again, anything can happen, so not advice. But what you can also do is if you think we're in the midst of a higher kind of realized volatility environment, you may want to take advantage of the ability to finance some upside. So you might go in and buy a 145 call for 12.25, and because you have that $6.25 to play with, you could go up and sell a 159. So you could get in by, say, like a 145, sell a 160, and put a little bit of cash in your jeans, and you now have a nice $15 play to the upside, right? So you finance this $15 upside play, which, I mean, it certainly looked like NVIDIA was going to kind of head in that direction. We have that call wall around 150 that I think was going to kind of shift up to 160, but I think we're going to have a little bit more to work through now through that 150 to 155 level, given what's happened today. So it's not horse out of the barn as I thought it could have been yesterday, but we're back to having to work hard to get through those levels that people may have expected to get to a few months ago, which was that 160 to 170 level. So that's a way to kind of finance that upside, not for free, because you have to remember the downside is committing you to owning NVIDIA down there. But I like those positions. One of the big reasons I like them is that they can give you patience, right? So if I just go out and buy this call spread for $7, I always have that nagging feeling when I'm long premium that things have got to happen quickly, right? You've got this theta, you've got this potential for Vega exposure. You're going to get hit on a drop in volatility, which may or may not happen, but you have this exposure that doesn't allow you to kind of think freely in terms of what the potential is and allow that thesis to play out. When you have a financed play, you don't have that nagging feeling that every day is costing you, what is this, $10 a day to own a position, or $20 or $30 a day. to own a position. So it's very freeing not to have that. So these finance plays are a really nice way to kind of have you just sit and wait and not stress over it, knowing that the worst case scenario is you own something that you like at a certain level you like, which is a very important component of this. Make sure it's something you like at a level that you like. That's our turbo play for the day. Be sure to open and read every option income newsletter that comes in, because I'm always some of my insight from almost 3 decades of having done this professionally, having managed almost $1 billion in option income strategies over the years, having generated $750 million in cash flow from an option strategy. So always going to be something interesting, something about markets, a little bit of macro, a little bit of micro stock ideas, and as always, some volatility ideas, because you're going to learn that I don't always like to do the same thing. There are going to be times where you need to zig, and sometimes you're going to zag. Sometimes being a good option seller is knowing when to not sell options, or to at least create some upside leverage to go with that sale. So there's always going to be a better way to do things. It's not a game of perfect, but we're going to certainly try, and we'll see you next time.